Hello and welcome to the Ally Invest Daily Service Show. Today on our show, our theme is a basic. Okay. Well, let's start that over. I'm sorry, we had a little bit of a sound issue there. Welcome to the Ally Invest Daily Service Show. Today on our show, our theme is a basic option strategy called a covered call. We're going to go into more detail. We had a lot of good questions last week, so we're going to go a little bit deeper on the subject. We'll discuss how to place a covered call trade in your Ally Invest account. And today we have Tamara Golub and Sean Kuhn from the Ally Invest Customer Service Desk. Sean will start by demonstrating how to enter a covered call trade in the Ally Invest live trading platform. But with that mentioned, our viewers are the ultimate drivers of content on this show. If you have any general questions about the platform, please start by putting them in the chat box right now on the right-hand side of the screen. I have to point out that for privacy concerns, please do not put any account information in, emails, phone numbers. We want to try to address your questions in this open forum with as much security as possible. So with that mentioned, before I pass it over to Sean, we're going to start by addressing a question that was in the comment section of last week's show, and that deals with assignments. We have a lot of questions around assignments in general. One of the question was, could you please show me online how to exercise my option contract via the platform? So with that mentioned, the answer truly is that you have to call in if you're going to do an early exercise on the platform. So I'll let Sean kind of address a little bit how you would go about that process, and we'll have a small discussion because exercising an option contract in general doesn't happen very often. So with that said, I'll pass it over to Sean.
Thank you, Brian. It's good to be back, and good morning, Tamara. So you're right. The feature to exercise is not on the website, and there's a reason for that. We want to have a conversation with you to understand exactly why you are attempting to exercise, because, as we're going to explain, it's rather rare to exercise an option early. One of the reasons why you would not want to exercise early is because there's a component to every option called time value. Now, you paid for that option, which you're presumably long because you want to exercise. So if you paid for this option and you paid for this time, we want to know why and help you walk through why you're forfeiting the time value component of the option by exercising early. Another way to think of this is that you want to ask yourself the question, why are you exercising? Are you exercising because you want to own the stock? Well, if that's the case, you may want to just simply sell your option, your call option in this case, and use that premium to turn around and buy the stock. Now, in that instance, if you're exercising, you're forfeiting the premium component that's in that option that has the time value amount. So really, it's we want to have a conversation with you to make sure we understand your strategy for exercising. I hope that helps.
Excellent. Yes, it definitely helps. And I just put in the chat box actually a section from my book, The Options Playbook, and it talks about closing out your option contracts. And if you actually pop that up on a separate browser, you will see that when you're closing out options in general, most of the time people sell their option contracts. As a matter of fact, only about 11% of the time do options actually get exercised. And a lot of that is because of what Sean mentioned, the fact that people want to capture as much time value as they possibly can. So in the instance where you're coming up to an expiration, you are long a call option or you are long a put option. That option contract is in the money. I want to emphasize that we want to hear from you. We want to be able to see that you are doing some activity in your account, because here's kind of a situation that makes our risk desk a little bit nervous, is that you have a long call option on a stock that is fairly high priced. If you exercise, you're going to have to buy those shares. if you buy those shares, do you have the cash in your account or at least the margin to buy those shares? Why? Because you're going to be assigned over the weekend and you're going to have to buy those shares, and then you're going to have all the market risk. If you do not have the right or have the buying power to own that underlying stock, well, that creates a situation for us and for the client overall, because obviously over the weekend, some news could happen, the market could go down, and hence you could have a situation where you actually have a loss on an option contract that you exercised because it had intrinsic value or because it was in the money. So the risk desk at Ally Invest is always going to try to do what's best for the firm and for the client, and they do not want to be forced to make a decision. So if you're coming to the expiration, you are long an option contract, and you think you're going to be exercised, a lot of times it's best to just try to sell and close out your position if you can. Especially if you do not have the cash in the account to actually be able to buy the number of shares that you would have to buy if you exercised your option contract based off of where the strike price is at relative to the underlying stock. So we want to see some activity. Reach out to us, jump in the chat box. Let us know what you're thinking, what you're doing. We look for orders in the account. We look to see, are you trying to close that position? Has there been any activity in the account? And once again, we ideally don't want to make that decision for you. We would rather have the client decide what they're going to do. So if we have that situation, you never know exactly what might happen. And on top of it, we're going to make that decision late in the day. So we might be forced to enter market orders, those type of things, to try to close out those positions in general. So I guess with that said, I'll pass it back. Any other comments from our customer service people?
No, Brian, thank you. Just you make a good point there that we'd rather customers take action with their expiring options rather than our risk department.
All right. Overall. Okay, everyone. So please make sure you put your comments in the chat box. We want that chat box rocking and rolling. You are the drivers of content for this show. So with that said, we'll start by passing it to Sean. Sean, you want to take a stab at entering a trade inside your Ally Invest account, legging into a covered call overall, and maybe talk a little bit about what a covered call is.
Great. Thank you, Brian. So I've got the screen here. Now this is a good example. I'm going to demonstrate how to both purchase a stock and sell a covered call. What that means is I'm going to have a short option. Going back to our previous conversation, you can't call us and say, please do not assign me. Whenever you're short an option, you don't have that luxury. So there's two sides to an option. If you're long an option, you can exercise. If you're short, you're not able to call us and say, please don't assign me. Your only option there is, your only choice there is to actually buy back what you sold. So let's take a look here. So we're going to do a covered call. That's under the research tab. If you select research and options, we're in the test account here. It defaulted to Apple. So Apple's trading at about $134. The calls are always on the left-hand side. So what we're going to do here is simultaneously buy Apple. Before I go there, I'm going to explain to you that we're going to go out a little further here. This is how you can see more strike prices. If we're buying Apple at $134, we're going to sell a $145 call. You notice there I was able to use the slide bar here. Here's your $145 call. If you double click, that denotes a sale. And if you come here to add stock, you'll notice that it defaults. It knows that I'm looking at the Apple option chain. So what's going to happen here is I'm simultaneously going to purchase Apple and sell a $145 call. For that, here, let's go ahead and preview the trade ticket. And what you're going to see here is that I'm going to be simultaneously buying Apple and selling the call. It's going to generate approximately at 17 cents. When it comes to options, though, you multiply that by 100. So in this case, you're going to be collecting $17 in premium on your covered call. Let me preview this order to give you a better look here. I'm not going to place this order, but in this case, you'd be collecting $17. And the further you go out, the more premium you'll receive. So if I was to go out, say, a month, I would be receiving more for this call than something that's expiring in just 4 days. Now, that's how we demonstrate a covered call from a brand new position. What I can also demonstrate for you is what if you'd like to sell a call for a holding you already have? So we'll go back to the dashboard. I want to see my holdings here. It's like I am cached on my holdings page. So let me see if I can get back to the holdings page. In the meantime, I think Brian has a question for us.
Yeah. So let me jump in here. And I got to welcome Rosemary. She says that she's a first-time caller on the show. And she says, good morning. I am wondering about IPOs. First time attempting to participate. Can I do this with Ally? Tamara, do you have any response to that overall? Because it is a little bit of a loaded question.
Yes, I'll be more than happy to answer. So with IPOs, you can trade them at Ally once they start trading in the secondary market. So once they are available on the market, then you can place an order for them. You do have to you can use settled funds to place an order for those securities.
All right. And what does settled funds mean necessarily?
They're funds that if you use them for trading, if you sold the security, it takes 1 business day to settle after an options trade and 2 business days to settle for regular securities. But in addition, the funds do have to be cleared after you transfer the funds into your account from a bank. It takes 3 business days for the funds to clear.
All right. And that's kind of, a lot of times people will come to us because they hear of an IPO and they want to participate in that. So they'll transfer cash and they realize that there's a settlement period. We need that cash to be cleared. And not only if you're selling your underlying stock, that has to be the case, but a lot of people are transferring in money, and there will be sometimes a 2 to 3 day holding period in that cash, especially if it's a new account, before those funds will be officially settled in the account and can be used. Now, the emphasis here is that on an IPO, if you're looking at it, you're not participating in the actual IPO, maybe that's being put together by Goldman Sachs or JP Morgan. You're participating in the secondary market via Ally, your Ally Invest account, after it starts trading publicly. So trading publicly means that you can actually type in a symbol and get a quote and see where that underlying stock is at, and actually see it's trading on the NASDAQ stock exchange, or it's trading on the New York Stock Exchange. Wherever it's trading at, you have to be able to get a quote on it, as opposed to going to the investment banking firm and buying it directly from them. So I want to emphasize that the stock actually has to be open on the secondary market and has to be trading. And then you have to have cleared funds in your account in order to make a purchase on that IPO. There's been a few of them recently that have been pretty hot IPOs. And so when you're entering an order, do you guys have any recommendations when you're entering an order for an IPO or a stock that's going to trade publicly for the first time ever?
Sure, Brian, that's a good question. As a matter of fact, you'll be required to place limit orders initially for an IPO. And the reason for that is for your protection. Let's say an IPO was priced the night before at $25, and you've got a market order to buy that security. If the stock were to open at, say, $100, you may not have intended to pay $100 for something you thought would be at $25. So we do ask you to place a limit for a brief period of time, sometimes for half of a day during an IPO.
All right. Well, Rosemary comes back and says, oh, okay, I see. That was helpful. And where do I do this? So if you were to place an IPO trade, where would you do it? And I think we got to emphasize that limit order. On the downside, Sean, my little feedback would be that if we can fill it at a lower price, we still will. You're just limiting what you're willing to pay on the upside. And we have had situations where people go in and say, I want to buy it at any price, thinking that, well, it's supposed to come public at around $25 and it comes public at 100 and they buy it at 100 and no idea that they would ever pay that amount for it. So it's very important that you understand the concept of a limit order and you put it in. And also you have to know that if we can get a better price than your limit's at 25. If we can get it at 20, we're going to fill it at that price for you. So whatever you feel comfortable with is the price you want to put in, and know that even after it comes public, if it ran to 100 and you still wanted to do it, you can cancel that limit order and put in a new order and buy it at whatever price it is, as long as you have the cash in the account to do it. So that's a pretty big emphasis. How would we go about doing that, Sean?
Sure, I can demonstrate that. I'm back here on the dashboard page. You would simply go to trading. So trading an IPO in the secondary market is no different than trading the other securities we've been demonstrating. So if you use this drop down here, trading, the IPO will be a stock. You'll put your symbol in here. So let's assume that the new symbol, this GM has been around for a long time, but if that was the IPO, you'd put the symbol in here, and here's the limit that Brian was mentioning. You're going to want to select a limit order initially for an IPO. We're going to require that for the first few hours, maybe for the full day of trading of an IPO. So you'll see the last price was $58.93. Here's where you can type in your limit. Now we're going to use a limit lower because I don't want to actually purchase this in the test account. And the other thing.
Let me jump in just for a second, Sean. Rosemary, do you know the symbol actually? I mean, nothing's meant to be a recommendation. You got to be careful because we're just trying to learn here on the customer service show. But if you knew the symbol, we could actually kind of look at it. We're using GM, which is obviously a very public stock. I think it's been around since dinosaurs. But in general, if you had that symbol, we could even kind of look at it. Oh, she says no. All right. Well, I was just tossing it out there. I'll let you continue, Sean, on the path that you were on.
Sure. The other distinction here would be is you'd either select day or good until canceled. So a day order would mean that order is good for the day. Sometimes people call us and say, does that mean I only own the stock for a day? And that's not true. If you actually purchase the stock, you'll own it until you sell it. In this case, you can either select day or good until canceled. Now, good until canceled will be that order will be good for 60 days. So in this case, that would mean if GM were to go to 55 within the next 60 days, you would be the owner of 100 shares.
And Tamara, if I'm going to do an IPO, which one would I use more likely, the day or the good until cancel? If I'm going to try to purchase an IPO in general,
it certainly depends. I would start out as a day order just to see where it goes. If by the end of the day your order is not filled, you can always change that. But a good till canceled order is it's a good way to do it too. If throughout the next several days the price is changing, you don't have to come back every day to place a new order.
All right. Overall. All right. So then Stang is back in the chat box, who is a longtime attendee of our show, I must say. And Stang's got a real good question. I know that came up on the customer service desk. He mentions a symbol, TRCH, which is actually Torchlight. And Stang says, I own Torchlight, and now I see a number instead of a symbol on my holdings page. Can you explain why this has happened? Who wants to take it?
I can help with that, Brian.
All right.
And this is what we like about the show is this is something very timely, and we can help you in real time. Not with account specific information, but what happened was the symbol TRCH had a reverse split that occurred on Friday night. Now this got a little complicated because simultaneously they merged with a new company called Meta Materials. Now that symbol is MMAT. Now if you look at your activity page, you'll notice that the number of shares you have has been reduced in your holdings page. The number of shares has been reduced exactly in half. So if you had 100 shares, you'll now have 50 shares of this new company called Meta Materials. Now, we anticipate that instead of those strange numbers you're seeing, you'll see the symbol for MMAT tomorrow morning, perhaps sooner. But the good news is if you don't intend to transact today, there's nothing for you to do. You don't need to contact us. You'll see that update overnight. If you would like to sell the placeholder symbol there, we can accommodate you. There are some disclosures we need to discuss with you, but we can help you transact in that placeholder today as well.
All right. And I want to take one step back, and I'm going to pass it back to Tamara. Can you explain a reverse split? Why did this occur? What is a reverse split?
A reverse split is when the company is trying to reduce the number of outstanding shares that they have. And there's several different reasons on why it could happen. Sean, maybe you can take that one for me, please.
Sure. So it's really just a math equation. So the value, at least at the time of the split, your value is not affected. So instead of having a one share worth, or say 100 shares worth $1,000, in this case, you'll now have 50 shares worth $1,000. A lot of smaller dollar stocks will do a reverse split to increase their share price to maintain listing requirements. When I say listing, I mean the NYSE and the NASDAQ require a minimum listing price to stay listed. That's one of the most common reasons for a reverse is to not increasing the value of the company overall, but it is increasing the value of each share.
Right. Yeah, because there are some rules even, and it just makes it more attractive in general. It seems like there's a sweet spot with stocks, somewhere between $5 and $20 or so, that stocks like to have their price, or I should say companies would like to have their price of their stock be in that range. Makes it more enticing for institutional investors overall because they have rules on it. And on top of it, there's listing requirements on exchanges. So basically a reverse split means the stock's not doing very well overall. That means that the stock price has probably gotten beaten up. There's probably been some bad news in general in the company, and they're going to try to do a reverse split to increase the share prices overall. And so, as Sean mentioned, you're going to have less shares, but at a higher price in general. So that was a great question. And that's Torchlight. So this happens in other companies. A lot of times you'll even see it in exchange traded funds, those fancy ones that track things like the VIX index and volatility and these obscure things, because they're based off of future prices. So when futures go down, it really affects the values of these ETFs, and they want to drive those prices higher. So that's where I see more reverse splits than even underlying stocks overall are these weird, not necessarily weird for lack of a better term, but obscure ETFs that trade based off of future prices and other odd things in general. All right, so let me see what we got here in the chat box. Wow, okay, so we got a lot of questions coming. Rosemary's given us a lot of kudos overall. I made an initial offer with the party this morning. Okay. Rosemary says, can I say the name of the company? Yeah, yes, you can. Of course, go ahead if you would like. And we'll try to address that company. And if we have that, we can kind of work through the process of entering an order for an IPO, because a lot of people get really confused about that limit situation. And they're like, I just want to buy it at whatever price. And in the IPO market, when it becomes a public market, so initial public offering is IPO. That means that is being traded behind the scenes. A secondary market means that it's being traded on an actual exchange. And when it goes from that private marketplace to that public marketplace, there's a built up demand that will happen on the open. And a lot of times with IPOs, you'll actually see that the stock will take 2, maybe 3 hours after the opening before they actually post the first price. And that's because they're trying to line up the exchange, I guess, is a better way to say it, is trying to line up all the buy and sell prices to try to determine where that stock should open at. And on a hot offering, a lot of times the IPO opens at a much different price than anticipated overall, based off of that supply and demand that's happening with all the initial orders for the very first trade of an IPO stock. All right, so I do got another one here. Okay, Black Ginger says, when selling ETF shares, can we select what exact shares we are selling, or how the shares determine, or what, I guess a little bit of a typo in there, but basically, can I pick my lot that I'm selling, Sean? Can I pick the actual shares, and you would be doing this for tax reasons overall?
Thank you, Brian. Tamara, would you like to handle this one, or?
Either or.
Thank you. So, Brian, just to confirm, they're referring to the tax lot specifically for if they purchase the 100 shares at different times, different amounts, so they want to sell the specific amount or specific lot, correct?
That is a correct statement. That's what you're doing, and you're mainly doing it for tax reasons.
Yes, you can certainly do that. You can call us and we can take that request over the phone. You can specify which lot you want to sell. Or we do have our classic platform where you can have the ability to change that yourself after every trade whichever trade you want to do.
Thank you, Tamara. It's important that you speak to us. I'd recommend you speak to us the day you make the sale, because the allocation needs to be done before settlement of your trade. So if it's a stock or an ETF, like you asked, they settle in 2 days. So you want to contact us. I would recommend the same day you make that sale.
All right. And there's no way to do this online. You do have to call, though, correct?
Correct, on our live platform.
Okay.
Not available.
All right. So I know the answer, but I'll ask this one. Since, once again, you guys are driving the content here, the chat box is much more important than the theme for the day. And we have Colin here, and he is saying, I'm new to Ally, well, welcome, and trading in general. Is there a way to display your dashboard chart that combines all your holdings in one single chart? John, you want to take that one?
Sure.
I know the answer, but I'll leave it up to you guys to chat about this one.
Yeah, so you can definitely have a chart for one holding, but it's not practicable to have every one of your holdings on one chart. You could compare your holdings. So one way would be perhaps to compare, say, your Apple Apple holding to another. But as far as one chart that shows all of your holdings, the best way to do that would be a comparison of each of your holdings. I'm not sure, Brian, how many comparisons can you make?
Yeah, I mean, I do know that you can go in and if you have a watch list set up with your holdings in it, you can toggle through them by clicking on the underlying stock. If you set it up, it will automatically put that in for each chart, and you can see all that stuff in your dashboard. You'd have to set that up in your settings in order to do that. But with that said, there's no way to go through and have actually all your holdings on one chart and do a comparison amongst. You can compare two stocks if you go into the charting platform, but I can't put all of my holdings in this situation. As we see in this test account, there's 3 holdings. One of them I think is a fake stock overall, but it will not, we just don't have that ability. But it's interesting concept, nothing wrong with that. All right, so I'm going to pass this back. Sean, I think, where were you on the order entry for a covered call?
Oh, sure. We're back. I could help with that.
And total portfolio performance chart, maybe. Okay. And Rosemary actually gave me the name of the company. I'm going to look to see if I can find that symbol. Okay.
Okay.
And I'll let you just chat a little bit about legging into a covered call, I guess.
Great. So I have the screen back here. So let's say we wanted to do a covered call on an existing holding. In this case, Siri. Now, covered calls, you need to. I would need to have at least 100 shares, but let's assume I had, say, 200 shares of Siri. I would simply, from my holdings page, it's very convenient, select this box here and select the option chain. Because I already own the stock, what I'm doing now is selling an option. So what you see here is Siri's trading at 646. If I were to say double click here, that's going to populate a sale. You'll notice the system is smart enough to realize that my strategy here is a short call. They know I'm selling the call against the Siri that I already own. So there's what we've demonstrated here is this way is how to, if you already own a stock and you're selling a covered call. The previous demonstration was how to both buy the stock and sell the call at the same time. You have that symbol for us, Brian?
Yeah, I do actually. Okay, so now I'm going to, before we go into this, especially in an IPO, we do not give recommendations on this show to buy or sell stocks. So even when we use real security symbols, that's not meant to be a recommendation. Obviously, we're just answering questions inside the chat box. So got to make sure that our compliance department is okay with this. So I did see IPO called Clear Secure. Symbol is Clear, CLEAR. Launch of a public opening. I don't know what day it's going to be on. I think that is the symbol, though. So let's try it. And here's one other thing, too. If you're doing an IPO and you're entering an order, you got to get the symbol. And sometimes it's not that easy to find in that it's not going to be in our symbol guide because it's not a public company yet. So you got to go to the internet to try to figure it out. So did it show up?
No, Brian, but that's a good point. So even if you know the symbol, if the stock has not come public yet, you won't be able to place the order with us until the night before or the day of the IPO.
Or another way to say it is we got to put the symbol in the symbol mechanism.
Correct, and that's common among brokerages.
I don't know what the word is, but
sure. Yeah, that's common among brokerages because until an IPO becomes effective, it's there is the possibility that symbol could be taken by another IPO, or the SEC may not let the IPO become effective. So I was Clear is not loaded into our system, so I'd recommend that the questioner look at the IPO calendar. I may be able to even research that while we're taking some other calls and see if I could find the date for Rosemarie.
All right. And if that symbol isn't in there, I would suggest using chat because it literally means that we just have to, if we have it's actually a number that goes along with the symbol, and that's actually goes along with the torchlight. There's, what is the name? I don't know. What do they call the number as opposed to the symbol?
Well,
and torchlight is the same situation, right?
We simply call it a placeholder, Brian. Okay. It's not a QSIP, which is the industry
term. It's not the QSIP. That's the word I was looking for. So I was wrong. That's not what we're displaying in torchlight then?
No, in this case, it's simply a placeholder.
Okay. Fair enough. But with that said, if you can give us some information, we can have it added to the symbol list. We can have it added to the dropdown overall, especially if we know it's going to be an IPO, which would allow you to accept those orders. And the chat box would be the best place to give that information if you can.
I think I found the symbol here. It's the name of the company is clear, but it's actually YOU is the proposed symbol.
Oh, nice.
YOU.
Yeah, there you go. I just saw it. Now that you say that, now the very last sentence says it. There you go.
And it's proposed this week. So I would recommend that the questioner, look throughout the week. So they said the week of 6/28. So that could be not likely to be today. I would say that's not today. So it would either become effective Tuesday through Friday. But to help the questioner, YOU is the symbol.
And so I'm going to emphasize one thing then. You should put that order in as a good till canceled then, because you don't know the exact day when it might be coming public. So you're going to put that order in with your limit price and with GTC, stands for good till cancel, means that it's just going to be live for the next 60 days, and hopefully it goes public within the next 60 days overall. That's the general rule of good till canceled orders. All right. Tamara, do you have a couple of comments on that?
Yeah, I actually wanted to ask. So, Sean, is it possible to put in a limit order prior to the security going to the secondary market, even if it's only if it's in our list? Is that possible to do that?
No, I'm glad you asked that. So you're not able to place this IPO. You will not be able to place an order today because it's has not been priced. So you cannot place a GTC either today. So I would what you need to do in this case is monitor the news, monitor the SEC.gov website. But no, in this case, a GTC will not be the solution either. So we will not accept that order until the IPO becomes effective.
Oh, okay, and I think this is important to note. Rosemary got her answer, so she's going to start her laundry now. So that's good. That's good to know. All right. So another great question. We're not really getting back to the topic, but I think we've addressed a lot of great questions today in the chat box. So David comes in and says, in Ally, is there an option to allow our shares to be lent to others? How does that work? And how does it benefit us? Could you share an example, please? Thank you. SIP, I guess, Sean?
That's a great question, and you absolutely can do that. I can demonstrate where you'll see how to get more information on SIP, and I'm scrolling down here. Right here, the Securities Income Program. And if you select this right here, there's a great 3-minute video that explains how it works. Now, I'd encourage you to look at the video, but I can also tell you that in essence, what you're doing is there's shares that you own. You're giving us permission to loan those shares out, which generally facilitates short sellers. And when you're loaning those shares out, you receive an interest rate anywhere from 0 to, well, I've seen it several 100%, which is rare but possible. And you don't collect 100% of that premium. That's split between Ally, our clearing firm, and you. But it's a great question. It's an excellent way to earn income on existing shares you own. There is some caveats that I encourage you to look on the video as far as dividend payments and voting rights. You're not able to vote while your shares are lent out.
All right. And a lot of times I'll just toss in that at other brokerage firms, some of the times they call it fully paid lending program. And we decided to call ours the security income program. I think it's a little bit more straightforward overall. I just want to let you know that there's similar things across the industry overall. And I got to address one with Jeff here. Why did you discontinue trailing stops? Not necessarily a great answer for that overall. Sean, do you have any insight on that, or Tamara?
We're always looking, to enhance our product, and when we get these requests, it's something that we may add in the future. It was a business decision of ours, based on the popularity of the order types, and we only have a certain amount of real estate available on the website to show you, and that was part of what factored in. But we do take your input, and it's possible we could reconsider.
Tamara, do you know what would be an alternative to the trailing stop? What do we offer for protection as far as a stock position is considered?
Alternative method that you can use is either a stop limit or a limit order that could protect you, and it could be an alternative to a trailing stop.
All right. So we do have that stop order that's in the account. The difference is that it doesn't adjust itself up. A trailing stop means that you can make that order get canceled and basically resubmit it all on its own to trail up the marketplace. But we do have that stop order and a stop limit order. So you can do it on your own. You can cancel it and resubmit it if you check it. But those are the differences between the two orders. So we do have stop orders and stop limit orders, and they are available through the live trading platform. Very straightforward. All right. Gosh, we're getting to the end here of our show. I think we got time for one last question. If we have any in the chat box here. All right. We'll make this one the last one for the day, okay? And I'll leave this last one with Tamara. Tamara, here's my last question here. Can I sell stock when I have my position on? And guess what? We got another one from Kevin, so we're gonna get two questions. Then we're done. So Tamara, can I sell my stock when I have my position on? And I think that has to deal with a covered call position, meaning that you own a stock and sold a call against it. And with that said, I'll pass it back to you.
Thank you. So if you have a covered call in your account, the system won't actually let you sell the stock because the option and the stocks are now connected. What you can do if you want to sell the stock, you can close out your option position, the short call, and then you can sell the stock.
Okay. And so this last one, this was a real good question, so we definitely need to address it. And this will be the last one for this week's show. Kevin says, will you offer a bank deposit sweep account that pays interest on non-invested cash? I saw there is one available, but does not currently pay interest. I'm not familiar. I'll pass that back to the SMEs from the service desk.
We do have it's called the Money Fund. It's a cash sweep program, but that does not pay out interest in the account. That could be something that could be added in the future, but at this moment, it's used for protection of the cash in your account.
All right. Do we ever pay? Do we currently? So right now we don't pay any interest in the money market fund overall. Is there an alternative? I guess that'd be a better way to say it.
There's a great alternative, Brian. very easy to set up an Ally bank account. And we have folks that move money easily from their invest account to our banking or checking, which last I looked for our banking is 0.5%. So while the sweep does not, if you have a banking relationship with us, you can easily transfer your funds not invested to the Ally Bank segment to earn interest.
All right. Well, that's going to be it for this edition of the Daily Service Show here with Ally Invest. So I want to make sure you click subscribe and ring the bell so you get all the alerts for the upcoming shows. And with that said, thank you for coming, everyone. And thank you, Sean and Tamara.
Thank you.
Thank you.
Bye, everyone.